Greetings, I'm Shaun Pruitt, Zacks equity strategist, and today I'm going to be discussing whether it's time to buy Apple stock after appeasing President Trump. So, aiming to shift manufacturing back to the United States, President Trump had previously made Apple his main target of companies that would face steep penalties if they continue to ramp up production outside of domestic soil. And this threat includes a 100% tariff on imported semiconductor chips, which would have dramatically increased the cost to produce Apple products, as most of the tech giants' iPhones and components are manufactured in India and China. So that said, Apple has continued to make swift moves to appease the Trump administration with a calculated blend of economic investment and political diplomacy. And this makes it a worthy topic of whether Apple stock can finally move past tariff concerns surrounding its global supply chain. So Apple's investment pledge to avoid tariffs. So last Wednesday, Apple CEO Tim Cook met with President Trump at the White House in the Oval Office to announce that the company will be investing an additional $100 billion in U.S. manufacturing, bringing its total domestic commitment to $600 billion over the next 4 years. So notably, the funding will support new data centers, smart glass production in Kentucky, and semiconductor partnerships in Utah and Texas. And Apple has also opened a manufacturing academy in Detroit, which is administered by Michigan State University to train U.S. workers in AI and smart manufacturing. So magnifying Apple's appeasement and political diplomacy, Tim Cook presented a custom-made glass sculpture engraved with President Trump's name and mounted on a 24-karat gold base. So most importantly to investors, this gesture was symbolic and strategic as it coincided with Trump's announcement that Apple would be exempt from the 100% tariff on foreign-made semiconductors. And if you haven't noticed, AAPL, Apple stock is gaining momentum this month, attributed to the tariff exemption. So Apple stock has spiked about 10% in August, still up around 10% so far this week for the month, with these month-to-date gains leading its magnificent 7 big tech peers. And this has been a worthy topic because Apple has been toward the bottom of that group for the year, still down about 9% to only top Tesla's negative 18%, with NVIDIA leading the pack at plus 30%, up 30%. So here you can see that month-to-date gains for Apple. So definitely starting to gain some momentum after those tariff exemptions with the meeting in the Oval Office last Wednesday. So Apple's valuation comparison. In terms of valuation, Apple currently checks in with the third cheapest PE ratio among the Mag 7 at around 30.5 times for earnings. And this only trails Alphabet's 19.7 times and Meta Platforms 27.2 times. So there you can see Apple's PE valuation right now. It's a little bit above its decade-long median of 23.6 times, but it is below the high of 38.6 times over the last decade. And Apple does also have the third lowest PS ratio among these big tech peers, among the Mac 7 at 8.1 times for its sales, which is still a little bit high overall, with the optimum level being less than 2 times. But it only trails Amazon's 3.3 times and Alphabet's 6.4 times as in regards to the Mac 7. So, and again, Apple still does trade at premiums to its decade-long forward PE and PS medians of 23.6 times and 5.4 times, respectively. And moving on to Apple Intelligence updates, which is very important as well. So one of the stock performance barriers holding Apple back relative to its Mac 7 peers outside of Tesla has also been the perception that the company isn't capitalizing on artificial intelligence like the others. That said, Apple may not have the ability to streamline its operations with AI at the moment, but its hybrid AI system, Apple Intelligence, does have more than 20 features across its platforms and operating systems. And these include visual intelligence features, writing tools, and continued upgrades to Apple's personal voice assistant Siri, which also includes integration with OpenAI's ChatGPT. And coinciding with its investment in domestic chip manufacturing, Apple has worked with Broadcom to build a custom AI chip server called Botry. And that's designed to power and enhance its cloud-based services, including for Apple Intelligence and the revamped Siri. Furthermore, Botry will handle AI inference tasks in Apple's data centers that are expected to include high bandwidth memory and tensor or matrix units optimized for generative AI workloads. Mass production for these operations is targeted for 2026, with full deployment by 2027, and will help Apple maintain control over its AI ecosystem while competing with NVIDIA, Alphabet, and Microsoft in the AI infrastructure race. So the bottom line for now is that Apple stock currently lands at Zacks rank number 3 hold. So to the delight of long-term investors, Apple does appear to be moving past tariff concerns surrounding its global supply chain with strategic investments in the U.S. and a very beneficial collaboration with Broadcom. Considering such, Apple should be on track to hit its expectations of single-digit top and bottom line growth in fiscal 2025 and fiscal year 26. Plus, earnings estimate revisions have started to move higher in the last week, which could eventually lead to a buy rating. Again, I'm Shaun Pruitt, Zacks Equity Strategist. I hope you enjoyed this content. For more, please feel free to visit zacks.com/promo.